I want to talk about my 4-step plan for financial freedom, which the goal is to increase your assets and thus reduce your stress and overall improve your financial health. There's 4 basic steps. Step 1 is just going to be save $5,000. Step 2 is eliminate any bad debt and just keep good debt. Step 3 is going to be save 1 year's salary. And step 4 is going to be pay off your mortgage or pay off your mortgage on a balance sheet approach. So let me explain a little further detail the 4 steps. Step 1, the $5,000. The idea of the $5,000 is what I found is that a lot of people, what they'll do is they'll get a $1,000 bill or a $2,000 bill, whether it's they need to go out of town or there's a wedding that came up or the car broke down, and they just put that on their credit card. And all of a sudden their credit card bills get out of control. So I've developed this plan where you put away $5,000, and then if you need $1,000, $2,000, $3,000 for a new furnace, you then just go ahead and just take that money, take it out of that account, which is your own money, and then you pay yourself back. And what I found is that people pay themselves back and are more disciplined about paying themselves back quicker, and they feel better about paying themselves back versus high-rate credit cards. So that's basically just step 1, not typically easily attained. Step 2 is going to be eliminate bad debt and keep just good debt. So the idea there is pretty simple. Any credit cards, car loans, student loans, things like that, we're going to move those either into your mortgage or we're just going to pay them off with money saved. I'm going to explain a little bit further detail there. But the idea is only have your first mortgage or possibly a small second mortgage, and that's all. Step 3 is going to be save your 1 year's income. So basically what that means is if we're able to save up $500, $600, $1,000, I've saved people $1,500 a month or more under this approach. And the idea is if you're making, for example, $100,000, you're going to want to save $60,000. If you're making $50,000, $30,000, or $200,000, $120,000 saved. So really just depends on the individual and where your income is. And trust me, you can get there pretty quick. And what I found is that if I can tell people today, if you have $5,000 in the bank, no credit card debt, and 1 year's salary in the bank, where would your stress level be at? And I found that people are pretty excited about that type of approach. Step 4 is 1 or 2 options. Either just pay off your mortgage or you pay off your mortgage based on a balance sheet approach. By paying your mortgage off on a balance sheet approach just means that, for example, you have a $150,000, $250,000 mortgage, as long as you have the equivalent amount of money in the bank and you can just write a check at any point in time to pay that off, then you really, with $200,000 mortgage or $200,000 in the bank, you write the check for $200,000, you don't have a mortgage. And again, there's some great tax advantages of taking that route. But most importantly, I just wanted to touch upon those 4 basic steps. If this is something you're interested in, please contact me at 203-254-4471, or you can email me, al@amerisouth.com. And please don't hesitate to forward this video link, that is, to any of your friends or family who you care about, who think it would be benefit. Thank you very much. Have a great day.